Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Well, that's weird. 2 cameras. We're experimenting with things here. We got 2 cameras going. Yeah, weird stuff going on here. We do money. I always say that. We do money. We don't do the camera tech stuff. But hey, we get better little by little. It's getting better. We got the sound stuff figured out, so I'm happy with that. Welcome, Mark, comments, Kirk, and the deer shooter guy. I like it. Hey, we're financial advisors here to talk about the stock market. I like to teach new things, right? I say this every day. I like to teach new things. I like to talk about things from a different perspective because otherwise you just watch TV, right? You know what I mean? You just watch TV and that's all that it would be. Our Wine and Wealth, every Thursday we do a Wine and Wealth class for clients, just a simple hangout, but I try to teach stuff that we don't teach on YouTube or things that maybe an advisor would tell you, little tricks and things like that. And tomorrow, I think what I'm working on is a series of tax tricks. Right? I'm getting really focused on this tax game because you just know they're coming after your tax money next, or what tax money you would get back. And so we're going to go over some more advanced type tax tricks, things that maybe you didn't know about. The fine print in the tax code where you go, oh, that's legal. All right, let's do that. So I've got a handful of them already. I'm going to try to put 4 or 5 together so we can go over those. And thanks to my birthday, I've actually got some Whistle Pig, Buffalo Trace, St. Augustine bourbon. So it may be a whiskey and wealth type night. I don't know. It's the only other way I can say that. Anyways. We've also got our FinTips videos out this week. Lots of different things there. Asset-based lending, a 529 trick. Eric's got a bunch of good videos out there. So be sure to check that out if you would. Down in the bottom right-hand corner, if you see a thumbnail you like, go ahead and check it out. They're free. You can check them out all you like. On Instagram, we solved the problem of the copycat account there. We changed our profile picture and put the blue check mark on there ourselves. Right? It's up. It's up. Take that. So we're self-verified. That's what we did there. A little work around the system. You know what I mean? A good financial advisor should always find a way to work around the system for you. Legally, don't want to get in any trouble there. Anyway, stock market today, down a little bit. You can see off to the right-hand side of your page there. We're down because oil just refuses to go down. I'll talk about that in a little bit. Not a lot of economic data to talk about there. You had mortgage applications fall another 6.5%, basically 2016 levels, and that in terms of new applications. Look, that's to be expected, right? Rates are going up. People go, wait a minute, let me think about this for a second. Refinances have fallen off of a cliff. If you're refinancing out there now, you're like the only person. That's how bad it is. Anyways. You got inflation numbers coming up on Friday, right? So that'll be the big econ news that everybody's kind of waiting for. We're expecting a slight tick lower, though energy could throw a wrench into that plan there. Slight tick lower to 8.2% year over year. The current's 8.3%. Give or take a point, right? Who's counting at this point? The trouble is the market's already priced in the fact that they think, or the market participants think, that inflation's going to have peaked there. So it's going to be super rough if we find that inflation did not in fact peak, because that's a lot of really what this is. People assuming the Fed did the right thing, they're on the right track, they're talking aggressive, they're going to get out there, it's going to be great. Remember though, there's one little hiccup. I don't know if you track this sort of thing, but we're a service-based economy. Like it, hate it, agree with it, disagree with it, whatever side you land on politically is fine with me. We can still be friends. But, well, we're a 60% services-based economy in terms of our total GDP there. So if we have high energy, high food prices, it's not likely, going to push inflation much lower there. So a little bit of tough there. A lesson of the day I'll give you real quick. Even in recessions, if you look at when inflation peaks, right? So take every single instance where inflation peaked and started drifting a little bit lower and look a year ahead, even including recessions. The S&P is up 8.8% on average. So peaking inflation is great news for the stock market. And it would be in this case too on Friday there. Half of all of those instances were during recessions. So remember, buying opportunities come when inflation peaks, even if it's during a recession. That's not my belief. That's not a rah-rah talk to get you to invest money or whatever. That's the fact. So when you look at inflation peaking, that's why we're talking about it so much, because it's such a boost to the overall stock market, not the economy, but the stock market there, that people are looking for that catalyst to say, oh, it's peaked, let's go. right? We know the stats going forward. The algorithms know the stats going forward. So something to keep in mind there. Anyways, the S&P is down about 1% on the day, but I don't know what to tell you, right? We're just chopping around here sideways. Notice the same thing. We got that summertime activity that is totally expected and largely happening at this point, where the action is in the morning. You then have a quiet, trending kind of rest of the day, and then the last 10 minutes or so, you see the movement there. The S&P is down about 13% year to date. Energy was the strongest sector today, and in fact, it was the only sector to finish in the green today. That's kind of a rough one there if you're looking. Every other sector was down on the day, and 1, 2, 3, 4, 5, 6, 7 sectors lost 1% or more on the day. If you're looking at energy for the year, don't worry about it. You're doing just fine in terms of the investment. It's up 67%, so nobody's really complaining. It is by far the best performing sector of the year. There's almost no shot that anybody else catches up. I would take that bet. If somebody wanted to say, I'll bet you it's not the best performer by the end of the year, I'll bet with you. We'll have fun with that one. Anyways, looking around the market, most everything did get pulled back throughout the day. Meaning if it started higher, it did see pressure throughout the day. That's nothing new. You probably know about that. Facebook managed to stay in the green today, but not by much. Tesla, same thing, about 1%, but that's not a big deal for Tesla. Now, not every energy stock was higher. Only the big guys today. ExxonMobil up 1%, Chevron up 0.5% on the day. Other than that, I mean, you got a little Netflix news in there. What are they buying? Roku? Cover that in a second. Or they're talking about it. And then you just have like news-driven stocks. Moderna was higher on the day. Caterpillar. These are all news-driven events that really had nothing to do with the broad market today. So that's all I got for you there. We don't need to extend this anymore. The NASDAQ, that was lower on the day as well. It's down about 22% year to date. I will say that a lot of the NASDAQ support today, at least overnight, came from China stocks. They continue to do their thing. Alibaba, there you go, 14%. When the mighty hand of the Chinese government takes its strangle off of your business, you've got a recipe for the stocks to be able to move higher. So they're all higher. JD.com was higher on the day. NEO, even if you're looking over there, is trying to come off of lows. Yum China, I think was the other one I was looking at. Yeah, Yum China a little bit higher. We happen to own it, so we're happy to see that moving there. Pinduoduo, be familiar with what these companies do before you decide you're going to invest. Baidu moving higher as well, and a whole bunch of others. Tencent, right? Also higher, but these have been crushed, right? So a lot of these names have really, really, really been crushed here. So good news for them in the short term. So it's kind of nice to see that happening there. Looking at the Dow, down a little bit on the day, chopping around. I don't need to say much there. The Russell giving back yesterday's gains. Gold's up about a 0.1% on the day. Bonds moving lower, meaning rates moving higher. And then you've got oil. Oil is on track now to be up 7 months in a row. And if it wasn't for Putin, this would be great. That's all his fault, right? Oil wasn't moving higher before this darn war. That's the message being put out right now, which I don't think many people are falling for. But honestly, I would say the same thing. You have an opportunity to place blame somewhere. That's what politicians do. It's like something you have to check off as a politician. So the argument is, well, what can we do without Putin? Here's the trouble. The White House literally says there's nothing we can really do or nothing we're going to do about this, and food prices as well. That take your preferential political person out of the equation for the moment. That's the worst thing you can say. Whether you're a CEO, whether you're running the country, whether you're a governor, whatever, that is the worst thing you can say for something that's tied to the stock market. Why? Because it gives the green light for the bulls to say, okay, well, let's go, right? Saudi oil production is not going to start ramping up for a little bit here. We've got a recipe for oil to go higher. The U.S. government's not going to get in our way. So to me, we could probably argue that. Everybody's going to have an opinion on that one. But, well, that was the worst thing they could have said. Absolutely the worst thing there. Horrible, horrible comments. But, that's what we're living with here. So let's go look at something that's going to bug you out a little bit. Right, so you've got oil here, and you say, what about the strategic oil reserves? Sadly, they're falling off a cliff. We are draining those strategic oil reserves there. They are now at the lowest levels they've been at since my actual day of birth, which happens to be today. So that's not a good sign there. It doesn't leave a lot of options going forward, but sadly, that's where it stands there. Now, to give you a glimmer of hope, let's back this out here for a second. I've been giving you a little bit every day, just a little something that maybe helps you think like, okay, we're turning the corner. Something's going on here. Let's look at delivery times here. So a little glimmer of hope here. Delivery times are rapidly showing improvement in the supply chain issues. Remember, that's part of our problem here. I talked about semiconductors yesterday. We've gone over the last couple of days talking about various things, car production, car imports, things like that, to show that, all right, maybe things are starting to shore up themselves a little bit there. It's not amazing, but here we have the Empire State Manufacturing Delivery Times Index. The lower, the less time it takes to get a product into somebody's hand. The higher, the longer it takes, and the more it costs, frankly. So we've got that moving in the right direction, more to a normalized level. And then if we look forward, future delivery time estimates have moved themselves back into a normalized level, right? So we're going to start to not be able to use the supply chain issue going forward, which is really awesome, Also, it's getting cheaper. So let's go over here. You've got air freight logistics. We'll go with railroads. We'll go with trucking. And I'm going to back this out here. We're going to just zoom in a little bit so I can show you. These have all been trending lower. Let's go even a little bit closer here. So if you're invested in railroads, trending a little bit lower. Trucking, although, has held up pretty good there, actually. I'm going to go percentage so it looks a little bit better for you. And then you've got railroads. I'm sorry, air freight and logistics, right? So that'd be your purple line in there. So a little bit of something actionable for you to take with you here. We're seeing an improvement in the supply chains. We're seeing the prices start to come down. Not a lot, right? I'm not saying this is a home run, but how it translates into something actionable is look at the pullbacks in some of these sub-industries. You call them a sub-industry because they're not really fully on labeled as an industry there. And if I do one more thing, I'll go like this. We'll say they're pullbacks off of highs. So anything in the railroad space, if you were to invest it as a whole, you're getting about an 18% discount. Anything else, you're getting over a 20% discount there. So trucking and air freight. So if you're looking around, Atlas Worldwide, Old Dominion, things like that, as a whole have pulled back past a bear market territory. It gives you an opportunity for a 20% discount. Yeah, I watch everything. So just like I said, every day when the markets are quiet, I'm going to share something different with you. I watch everything. I don't know what to tell you. Anyways, I like to share that with you so you know, ooh, he's got his eyeballs on everything. New highs and lows. You got 14 new highs, 2 new lows on the day. The 14 new highs today were all energy, every single one of them. I hope you like $5 a gallon. I saw somebody, I recognize the face, but I don't know who it was. I don't follow the politicians much, but I saw a politician said, it is now cheaper to just buy cocaine and run everywhere you got to go. Did you see that, Cody? You got to find who it was, but he's the guy that always says something funny. He's maybe from some sort of Southern guy, but he's like, it's now cheaper to just go buy cocaine and run everywhere. It's the price of $5 a gallon there. And that probably means our video is going to get taken down. But I thought that was, it's a funny comment on something that's really not that funny. Anyways, they were all energy stocks. They're higher. Marathon Petroleum. You got Phillips 66 hitting new highs, very extended. Don't fall into the trap of buying something that's super extended. You got Hess making new highs. By the way, this has the highest PE multiple of all of the stocks that made new highs today. 55 times earnings there, so take a second guess before you look at that one. You got Apache. Actually, Apache's the cheapest out of all of them on the list today. You got about a 7x multiple on that one. So remember I was saying yesterday, energy is overpriced but undervalued. Here's a great example of that. Oh, and actually, look at Diamondback, just because it's in my head here. Diamondback is the second cheapest. 10 times earnings there. So obviously they're killing it and doing really well there. But that's it for the new highs. 2 new lows today. They were both REITs. If you're looking at the REITs area there, bit of a weak day today. It's down about 16% year to date. You're getting discounts there. You don't have discounts yet. So careful on that one. You want to do some stocks in the news, and I'll take your questions if you happen to have any questions. You guys always got questions, huh? Let's see if this works. Hey, how about that? So first up, there we go. Dial it in there, right? You know what I mean? Affirm. This is, buy now, pay later. Stock was down 4% on the day because these guys are not immune to higher costs out there. Bloomberg says, well, they've got higher costs on these buy now, pay later loans now because of the scale. They haven't quite factored in the scale yet and able to account for all the people that seem to want to buy crap and then pay for it later. Amazing how that's become a thing here. I don't know what to say about that. As a financial advisor, it's a little disconcerting. You've got Ollie's Bargain Outlet here. We own this one. We got a great cost basis on this one, so I'm happy to see it move higher today. It was one of our better performers on the day. Not a good quarter for them. The stock moved higher though. Why is that? Not good. They said, stimulus money has pretty much dried up. We didn't meet our earnings goals by not even close. And our revenue is less than expected. And going forward, it's going to be lower as well. So why would the stock move higher? Pricing power. Remember, I keep talking about people want to know that you can pass on these costs to existing shoppers, or you have a way to combat that. Their exact words: currently, our inventories, that's a key word because of Target, our inventories are in terrific shape, and we continue to see compelling deals on great brands across our merchandise categories, especially things in housewares, lawn, garden, air conditioning, and pets. In addition, our DCs are running well and goods are flowing into our stores on a timely basis. What's a DC? Distribution channels, right? So they're basically saying, we don't know what Target's talking about, right? We're finding that our inventory is in good shape. We're cleaning out our inventory, meaning we're selling some stuff, not as much as we were, but we're selling some stuff. And when we need to sell more stuff, we're able to get it in a timely manner. That's breaking down fancy talk for you. So really optimistic on what they said going forward. They basically were able to guide lower for next quarter and get you to shake it off and say it's not a big deal because these guys got something going on. And it's a rather interesting store if you've ever been in one. I've only been in one in my whole life, but rather interesting store. All right, let's talk about Roku. Just see it up 9% on the day. This is the second time this year that someone may be interested in buying them. Now, to be fair, this is not a report that's based on anything factual. So the news that moved the stock today was pure rumor from employees at Netflix. Just employees, right? So I don't know if it was a note or something that came out. This was nothing that came from Netflix. It was nothing that came from Roku. They both chose not to comment on it. But the concept here is the report says Netflix may be looking to buy them. I don't know why it's a good deal for Roku to take that deal, but nonetheless, it gets the stock moving higher. And this is exactly the kind of thing I was talking about as my stock pick of the year, that it's going to get bought out, right? It's happening. Whether I have it right that it's happening within this year or not, we'll see. But when there's rumors, something's going on, right? So it's got that pricing action right now, like something's there. Maybe it starts an uptrend, then gets bought out. But I don't like the idea of them getting bought out here, personally. Wells Fargo says, we may split this company into two different segments. We'll do anything to gain trust back again from our clients and people to give them a shot because they have the lowest rating in terms of overall sentiment for any bank out there. Then you got Campbell Soup. I'll try to tell you something a little bit different about this one. So I looked through their earnings. I guarantee you not one of you did. It's not very exciting. I looked through their transcripts actually to hear what they were talking about. Here again, pricing power. This is the second time this year they've been able to pass on higher prices to their shoppers through their brands. They have many different brands, and shoppers accepted it there. Organic net sales were up 9%. That's because of what they're calling the second wave of how'd they say it? Second wave of inflation-driven pricing, right? So they didn't say, we hiked up prices on people and they just soaked it up, man. No, they said, well, we've had some inflation-driven pricing issues, and that's their fancy way of, they're just like politics. That's their fancy way of saying stuff to make you go, oh, well, that's not so bad. That sounds actually good. Anyways, couple fun notes for you, and I'll leave you with this because, often you don't look in these companies. You think soup. They have all kinds of different brands. Pace. Are you a Pace salsa person? So Pace, I don't know how they track this, but they added 800,000 new people, meaning people that tried it and came back and bought it again. Like they count them as now clients that will keep that purchasing going on. Goldfish. These are their words. Goldfish consumption, which by the way is their largest snack brand. So Campbell Soup owns them. That's their largest brand. Their overall consumption, eating them, up 8% in the quarter and up 18% compared to 2019. What are we doing? I didn't know goldfish. I mean, I don't eat goldfish, but I like gold. I've had them in the past. They said that kids that are younger and they're eating them are now continuing to eat them in their teens, and their parents continue to buy them for them. Good job, right? Not bad. Also, a fun fact, Old Bay seasoned goldfish is a new product for them, and it sold out in 9 hours. Old Bay seasoned goldfish. I'm kind of interested in trying those. Cody? You in? Cody's like, I'm not here, man. Don't look at me. Old Bay seasoned goldfish. New product. 100%? Sold out in 9 hours. Let's see if we can get our hands on some. I really feel like I would try those. That's got to be good. But anyways, that's a different way to look at. Otherwise, I could just sit here and be like, they reported better than expected earnings on stronger revenues, and they raised their sales guidance for the following quarter. What does that mean? What does that mean? They beat on earnings because people were stuffing their face full of goldfish, right? Not a bad thing, unless you don't like goldfish. Anyways, let's see what questions you have. There we go. Let's go over here. And all right, let's see what questions you have there. No, I like it. Campbell Soup's less chunky. Yeah, Campbell Soup, organic growth for Campbell Soup, also very good. And they made a whole stink about, when there's inflation, people stop going out. They start going to the grocery store. Hey, we happen to have all these brands available for you. Yeah. When will that pricing power no longer sell products? You got to imagine we're on the cusp of it. Like, we're talking peak inflation. I think we're talking peak people willing to accept inflation before they start changing their habits. You got to imagine it, right? You got to imagine it there. Tax cuts would also help inflation, you think? If you were paying less tax and had more money in your pocket, what would you do with it? Wouldn't that mean you'd be like, oh, great, now I can spend $5 a gallon on gas. Oh, great, I can buy more protein for 22% more since just last month. Oh, I don't know. I don't know about that one. What did I say? Distribution center? No, I said channel. Sorry. I do that. Chi-Chi's salsa. I'm a straight Publix brand medium salsa. You know what I mean? And I don't know. I mean, it's not that I can't afford to buy different salsa. It's just always right there. I just grab it. I like it, Yeah. Taxes on the middle class cause recessions there. Well, I hated the answer. Any president could have said that, and I would have been like, you're kidding me. Why would you say that? You just gave the green light for bulls to just buy up all the oil they want, all the energy stocks. Why do like the Fed does and talk tough? At least say you're going to be doing something, and then people go, ooh, I don't know if I want to invest in that because the government may start, getting us back to normal on gas prices there. That was a tough one there. Instead, they took the time to talk about, well, if the rich, people making under $400,000, we still don't know if that's individual or married filing jointly, but if the rich would just pay their darn fair share, that would fix everything. What? Care to elaborate? Would like to hear more about that. I'm open to ideas, but I'd like to hear more about that. Ugh. You got some goldfish now? We'll have some next week. You found it? Oh, okay. We got Old Bay goldfish coming. Ah. Oh, that's what they want to hear, is me crunching. We will give our full review on Goldfish Old Bay next week. And I'm really excited. I shop at Publix. I'm bougie. For my salsa, I do. Yeah, I do shop. Publix I think it's really the only grocery store by it. There's like 6 of them within walking distance of, I don't know why there's so many. Yeah. You never run into angry people at Publix either. I have not read that book. No, I have not. Office trades will be coming back. We actually have a unique opportunity to sort of build out something that we're working on building out. And I can't say it, right? So I didn't want to say it. But so that's a slight distraction at the moment. Oh, man, that's my kind of person right there. Just eating a few Twinkies, watching some WWE. Is that still something? WWE? Yeah. That's a big deal? What sector wins the second half of the year? Oh, like from the second half to the end of the year? Yeah, I don't know. You could take energy right out of it. That would be incredible if it did. So I would scratch energy, but I don't know. I couldn't say. Medium salsa give you the spot. You know what's funny is now I'm so accustomed to just grabbing the color. I see the color of the top and I just grab it. It never has occurred to me to go, well, that's not spicy. Try something else. Maybe I'll have to do that for you. Yeah. Mild salsa? I don't know. It's too watery. Well, the Publix brand's too watery anyways, but we'll have that review for you. Yep. I like it. Anyways, I will wrap it up there because I did a little rambling today. Again, I'm using these days to go, well, this is not time to be all excited about individual stocks or sectors or ETFs to buy. So let's learn something, right? Let me teach you something new. And I am looking at the comments so I can see if there's something you're interested in learning. If I know the answer or have any experience in it, of course I would talk about it. If I don't, I'll be honest with you. Just say I don't, but maybe we can grab Eric and get him to teach. Otherwise, I'll wrap it up here. Enjoy the rest of your day, and thanks for hanging out with us. Enjoy.